The moving averages are pointing in a positive direction where they are all bullish, they are spread out. What we had after that was a pushback and retest, right? Nice little pin bar right here. Push back into that level. That in itself is the daily chore signal, which would mean you would look for a buy if we break above the highs of that candle. Now, we did not break above the highs of that candle yet. On Friday, we actually put in an inside bar, and an inside bar is going to be this little guy right here. And essentially, an inside bar is a candlestick that completes, completely within the range of the previous candle. And that's a sign of consolidation, contraction, and we know that contraction leads to expansion, meaning that as the market, if the market were a spring, I don't have a spring near me, right? If the market were a spring and you were to kind of push it closer and closer, eventually it gets to the point where you can't squeeze it anymore and it boom, pops out and goes somewhere, right? That's what we would expect here. Now, in traditional inside bar strategies, you would look for a break of either the high of the inside bar. I'm going to keep this here just for whatever purposes, but you would look for a break of the high of the inside bar or the low of the inside bar. I like having or using what's called a bias inside bar technique, and I'll link some videos below if you guys want to check those out for more details. But what that means is that I want to have a directional bias. I don't just want to kind of be like, hey, whichever way it goes, I want to trade that way. I want to be very intentional about my trading direction. And this specific location, because of that daily chore candle, and just because of the wick, right, the message that was left by this long tail and rejection to the downside, I would be biased with a breakout to the upside. So 2 ways you can look for this.